I have no matter.
Alright traders, welcome back. I've seen you since last Thursday, so got a fair little bit to cover here. Some sentiment change in Asia and start of Europe so far. So some of the risk off that was going on. We were selling last week on the Dow. We got out of that. We're into some long oil actually. Now that was just mostly due to the fact it was creeping back higher. I'm going to close out one and put my stop to entry on the other. I'm not sure how far we're going to get in this recovery. I've got some pretty strong resistance, and downtrend is pretty well established in this pair. So this is more just a short squeeze sort of thing that I was going for. In terms of what's driving the markets, I mean it's pretty low news, right? So there isn't much going on that could really justify recovery here in stocks, but you don't need that in an uptrend, right? You just need support to be found and a little bit of bullish price action, and buyers will come back in and the sellers will get out. And so the resumption of uptrends is pretty common in the stock market. So let's not get confused here. The uptrend is definitely in control, and maybe the selling was due to concerns about oil going further, but with the lack of oil follow through and a little bit of recovery for the last 4 days in oil, perhaps then the market's got less to worry about, and another false dawn in terms of this being the start of a correction in the stock markets. And with dollar yen reacting as well and finding support after going sideways for 3 or 4 days, this is enough to be risk on in your mind. In terms of pairs and the yen crosses, which are doing well, the pound yen's doing really well. Now it looks expected to be an announcement today or tomorrow regarding DUP and May forming a coalition or an agreement to party. Now that should have some sort of effect. Might be able to get the pound past 128.10. I don't know if we can go too much higher than that on the back of that alone. So far Brexit negotiations haven't produced any too negative headlines, just they're progressing pretty much as forecast so far. Europe wanting more and UK giving less, but nothing crazy, and UK is probably, if anything, a little bit softer than I would have expected in the negotiation stance so far. So what else is what in this scenario, what is a pair which is if you naturally told me, and I was talking to clients about this today, we were in a trade last week long gold, and so today we were basically, I was calling clients and I was saying, get out of gold, because that little bounce higher is is sort of stalling, and the outlook now is a little more mixed, and it's in a downtrend. So why would you stay in that trade? So we're talking about gold as it was mucking around here in the high, starting to grind lower here in Asia. Now we did have a fall off the cliff just a couple of minutes ago, and I was reading in that FXWW chat room. Let me read it up for you. What that was caused by. 1.8 million ounces volume on the gold future market in 1 minute. 4.8 million ounces in silver. So yeah, 56 tons of gold in a minute, which they suggest is a big trader liquidating. Also a bit of stop hunt going on, and if you get that sort of selling going on, you're going to get algos trying to sell in front of it, because they can see the orders coming through and they try to flash run in front of that, so that creates even more selling. And so in that regards, it's very hard to stop. Now that's where some concern here, the algos and flash crashes and something like in gold is a very strong possibility when you have a big order going through, and you've seen it more than once in the, if you've traded gold for the last 4 or 5 years, you've probably seen this 10 times, that sort of move out of nowhere. And in early Europe like this, it's usually pulled in, it's usually a start a US Open stunt, but doesn't mean it's going lower. Not really. I mean it is in a downtrend, but doesn't mean there's heaps more selling going through or some sort of gold story that's out there. Not really. I mean, it's just more one order that's got out of control, and it could be a fat finger, but it hasn't really snapped back, so it suggests it's not. And definitely dangerous to buy, even though it is 1.5% lower today. It's definitely dangerous to buy because the trend is low. Yeah. So and the risk is on in terms of stock markets. So the underlying reasons to buy gold, which is oil falling off, stocks falling off, gold at a good price action helping support buying more and more gold, is being taken away in the last 24 hours or in the last 12 hours, that's for sure. And so this resumption of the downtrend now, it's sort of like selling stocks. You just don't do it now. Like, it just doesn't make sense. If you're not selling stocks, then you can't be buying gold with conviction, no matter how low it is on the day. And can gold go further? Yeah, I mean it can, and it has before in the past. So it could be one of those days it goes to 12.30 or even down to 12.20. I mean 12.30 you probably have a better argument to be buying, but in terms of just a retracement for the day, but just not here. Yeah, no, it would have been impossible to trade as a retail trader, that gold move. It was really quick, and you wouldn't have got filled very well by any broker probably on MT4. So yeah, just be careful. I mean, not always am I so cautious on buying plunges, but this one, I mean, we're not anywhere significant now, so there's no reason to get involved. Can dollar yen get above 111.80 and 112? Yeah, it can. Would this lead to some downside pressure on the euro? Yeah, it will. But euro yen is taking up the mantle quite nicely. So euro yen is looking quite well supported and making gains. Pound yen's really where it's starting to get more serious. So if you're not in a trade, then pound yen makes sense. And you can probably enter pound yen right away, right? Still. Yeah, it's no reason that you have to worry too much about a sharp reversal. Carney is speaking tomorrow. He's speaking tomorrow. Maybe we want to be careful going into that, but I'm talking about what happens today, right? And a stop hunt above 142.50, and potentially sharp moves in the pound are always on the cards. So let's have a look at the. I mean, we're buying a little bit higher in the day. Yeah, I mean, look, it's not. Okay, we probably haven't got. It's not a good entry. I'm not going to enter it just because we're on stream. But yeah, if you aren't in pound yen, then it's not the worst. That's probably the closest thing I would look to buy right now. Now, was Canadian dollar and Aussie dollar and Kiwi dollar doing well? Yeah, they're all doing very well in terms of probably a little bit stronger even than the US dollar right now. They're well supported and they're probably going to continue to go higher. So dollar CAD's had that snapback, and we're very lucky we got out of dollar CAD last week at the above 133, because we took profit and it was just casual. It was like, oh, I'll get out of here, mainly because the market was not reacting too much to the selling in oil, and the oil started to find a little bit of support. And then you had the CPI was on Friday. I don't want to mess this up, guys. The CPI on Friday was a lot weaker than expected, and so we got that smack back here on this. But the retail sales, as the market was rolling over back into downtrend on the Thursday, this is after my last stream last week, is the main catalyst that's got us crunching lower, and that with the recovery of oil means that it's just likely that the downtrend continues here. I mean, look, it can find support and then perhaps we'll go range trading, sideways trading. But if you're looking at the Aussie price action today as well, Aussie is just relentless, and this is really, there's no news here for the Aussie to be behaving so strong. Even with gold in the last little minute falling, it hasn't really fallen much in sympathy, and it's just finding support, and it really could easily gone much lower last week. Finding support, grinding, and it's got that feel about it. So I suggest, rather than going back below 75, 77 is probably closer and easier for the Aussie to get to, and that would coincide with the Kiwi getting up to around 74, breaking some of its resistance as well. Because the Kiwi traders, if it's going sideways, that's the same as having correction. So if it's going sideways, and it has been since RBNZ, then it's same as having correction, and then the next move will be just usually the resumption of the uptrend as well. And with risk on, and Euro Kiwi selling, Kiwi Yen buying, Euro Aussie selling, Kiwi Yen, Aussie Yen buying as well, it's easy enough to see the Kiwi CAD and Aussie commodity block be basically the strongest in the market this week. This will continue if stocks remain strong. Alright, so it's another way of playing dollar yen higher by picking one of those pairs as well. And can it continue for a while? Yeah, it will continue till it ends. And the thing that you have to look into is that, right, why is it likely to continue? Because we had every reason for Canadian dollar to get sold last week, every reason for the Kiwi dollar to get sold last week, every reason for the Aussie dollar to go down last week, and it just didn't happen. So you're probably going to keep on, you're probably going to get more moves to the top side in all three of those. And yeah, if you're talking about how to express US dollar strength, or just react to this dollar yen weakness, it's probably not safest to be selling the euro. It's not really, the two aren't the same. Yeah, you should probably be looking at just straight up, if you think the dollar is going to be strong and risk is going to be on, and just straight dollar yen is fine. There's nothing wrong with that trade. In contrast to that, Aussie, Kiwi and CAD are all doing fine. There's no reason to sell. Let's have a look at Deutsche Bank's trade of the week, which is selling Kiwi. I'm very interested to see this. I only saw the title and I haven't read the actual report yet, so this should be quite interesting. Let's see how they come across with this. Alright, so they're selling at 72.80, so at market basically right now. Alright, so the first sentence is medium term. We think that their first RBNZ hike in the first quarter of 2018 remains underpriced. Okay, well that's hawkish. However, given the rates market is less hawkish on the RBNZ, and now prices are 1 year, so that's the difference between the US and New Zealand 1 year spreads, less than 1% against the Fed. The Kiwi is significantly overshot rates pricing. So it's just too high compared to the yields, right? And largest weekly increase in net longs in the latest IMM. So market's just too positioned too long, and even though the retail market's heavily short, market can still go short. So they're going tactically short. The risk to the trade is that the US Congress reaches a stalemate on the healthcare bill. The healthcare bill is actually something we need to discuss, because the healthcare bill will create a lot of volatility if it's passed one way or the other, because it'll be, if it passes, then it looks like Trump's agenda is back on track, and he's got ability to get something through, so therefore he can get his tax plan through potentially, increasing the market looking forward towards that. They think that profit taking on the Aussie Kiwi short could also help with the clean out of the Kiwi, and the Kiwi actually cleans out when it sells off, right? So the correlation here between US and Kiwi rates is pretty strong, so it has had a little bounce up. Perhaps we are going to have a pullback. Let's see how they've been going so far this year though. Not too bad. Hit ratio is 60%. Okay. Alright, so we'll see if it works out as they suggest. Profit taking, basically getting out of control, is the main theme here for the Kiwi. I don't know. It's not my trade, not my sort of trade. Wanting something to happen that hasn't happened or have a reason to happen is not my sort of trade. Alright, so there's still got to be room here for the US stocks to get back to their all-time highs, and if we were resuming uptrend, that would be the first target, and so that would put dollar yen substantially higher. US yields, we check on those, see if there's movement in the US 10-year. If there's no movement in the US 10-year, we have to be tempered a little bit about this move. It could just be an attempt higher rather than something which is sustainable. So what you're looking for is a move back to 2.3, and you're not really getting much movement at all. So it's definitely not so much a bond market story here, but you are getting stabilization, and perhaps we will get the next move being higher. But you can see it's not a yield driven movement, so it's you need to be a little concerned that it's unsustainable, and could be just a stop hunt, or just getting to 112. That's about it, right? Anything more than that will require a bit more behind it. In terms of Fed speak, there was Fed speak out earlier today, but nothing crazy was said there. It really looks more like market looking for resistance rather than anything else on the dollar yen, and euro's got support coming in pretty close as well. So I doubt we're going to get too far. So Europe below 111.50 doesn't make too much sense. Dollar yen above 112 without reason doesn't make too much sense. This week we could definitely have some reasons coming, right? This week is ridiculously stacked, full of Fed speak and ECB speak. Literally every central banker speaking. So you've got Draghi speaking twice tomorrow. You've got the assistant governor for Australia, RBA, speaking. You've got Carney speaking tomorrow, and then tomorrow night, so this is Tuesday US session, you got Yellen speaking, and then you've got on Wednesday night you got Bank of Canada Governor Pelez speaking, Draghi speaking again, Carney speaking, and then the BOJ Governor Kuroda speaking at an ECB Central Bankers Summit, right? So that's nuts. That's nuts in terms of central bank speakers. That's pretty much everyone speaking this week. So I don't think anyone's not speaking. RBNZ, that's about it, right? RBNZ's the only central bank not speaking. Every other central bank is speaking this week. So basically, you know, it's a huge week in terms of setting their agendas. Now, why is it interesting? And we'll talk more about this tomorrow. Why is it interesting what Yellen says? Because this is sort of the first time Yellen's spoken since they raised rates. And if there was something wrong in terms of what the market took away from the Fed meeting, then she can clarify and push what she thinks is important again. Yeah, so if she thinks that inflation is not as big concern as the market, then, you know, the chances of them raising again increases this year. Yeah, if she wants to bring the subject of asset balance sheet reductions onto the you know, further along the timeline, she can speed that up very heavily by giving some clarity on exactly what they're thinking, right? So there's a ridiculous amount of room here. Now, Draghi is always you know, dovish, and he may not be happy with the lack of reaction to the ECB at the last ECB meeting, and if he wants to further delay the tapering timeline, then he has 3 opportunities this week, sorry, to speak and do that. Yeah, so it is really important. So Thursday's ECB, so Wednesday's night ECB Central Bank Forum, where Kuroda speaks, is also another, you know, scenario, another place where if BOJ is going to chuck a curveball regarding when they're going to start tapering or the speed of their tapering, that's where they'll do it. That's very unlikely. But Carney can come out and once again suggest, you know, talk about the timeline for the BOE raising rates, yeah, one way or the other. And loose lips will sink ships there in these sort of things. If he comes along and changes his tone at all, you know, it basically can't get more neutral to dovish than he is, right? So if he repeats the same thing, then the effect will be limited. But if he says something a bit more interpreted towards them raising rates, then the pound, there's no reason we can't get to 130. Especially if the UK May and DUP make an agreement, right? And pound yen's on another rally mode, then there's no reason at all that you know, the pound can't get to 130 this week. So yeah, let's be open to a few possibilities here. I think if you're not in the market on any of the yen crosses, I think buying dips is fine. Aussie yen is the way I like to play it at the moment, mainly because Aussie Kiwi is having a nice little rally. So where's Aussie yen? Let's have a look at that. Currently, it's got a natural place to stop as well. So we're just going to be going for probably mid-range 86.20. So either the Aussie dollar going to 77, getting past 76, sorry, or the dollar yen breaking 112 and Yellen being a little bit more remaining hawkish. You know, putting her own case out there, much more. The Fed's much more hawkish than the market right now. Then easily this can continue up. So I'll probably post that into our. Let's post that into our. The trade ideas section of the website. I mean, you don't have to. Look, I mean, it could be some sort of delayed, crazy, late sell-off on the Aussie CAD and New Zealand dollar right this week. You know, you don't have to. Don't take my word for it, man. I'm just, I just suspect that Aussie's going to do quite well in this sort of risk-on environment, and that if it's going to go down, it would have gone down last week, and it's trying again to rally, and the dollar yen's trying again to rally. So it's not so much that I'm ultra bullish on this. It just seems like a one way to play risk on right now. But if you're short the Aussie, I mean, you have to be pretty patient when you sell the Aussie, right? You have to be very patient, yeah, because it's not giving you much. It's 2 weeks in a 30-point range. It's crazy ridiculous. So that's at the start of June, 75, 40, literally the start of June, and that's it. Here we are here. I mean, this is ridiculously tight. 80-point range, not for a day, for a month. Right? That's how ridiculous it is. So, yeah. Aussie yen. So it's very easy to put your trade idea in. Just got to find your pair that you're playing, set up the numbers. So 370. $86. 86.30. Remaining stubborn. CAD yen and Kiwi yen are both the same. I like Aussie Kiwi higher just at these levels. Well, I mean, it just has potential to kick. So yeah, not really a crazy trade, just a trade that we can get stuck into. Pound yen's a bit more of a risky one, and Euro yen's a little bit more risky in my opinion too. Just because Draghi's speaking. Right, and if anyone's going to rock the boat, it's probably Draghi. Going to try to anyway. Alright boys, what are we up to? Let's quickly have a look at technicals, and then we'll call it a day because there isn't too much to be focused on today, but tomorrow we've got a fair bit of prep to do on what happens in the UK and what my Draghi say, and then what's Yellen planning. So today we're just seeing where these levels are. So the euro does look well supported on a daily, and potentially we are going back towards that 113 for a test. It won't do that if the US dollar has a nice little rally and dollar yen does well, but it may not fall very far either. So we've seen it's pretty stubborn on the downside, but it's struggling to make too much topside. Dollar yen, the bullish for 112.15. So that downtrend from way back, if you draw a trend line like that, it's coming in around there. It's a 38%, huh? Alright. Alright, so looking at this strength as just corrective if it stays below 128.10. Yeah, I mean, it's really hard to play the pound at the moment. As you guys have been talking about in the chat room, I've seen you discuss, is the DEP May agreement going to lead to a short covering and then a failure and then another downside test? Maybe, yeah. I mean, broadly though, if Carney opens the door at all to rate hikes this year and the dollar ends in a rally, then everything's lined up a little bit for a pound yen rally. Pound yen rally is a pretty strong way of getting the pound to rally itself. And the Aussie bounced off its 200 day. It is really looking quite nice, the Aussie, to, I mean, I don't believe it or really understand it, but you know, it just looks like we're on the way up rather than the way down at the moment. So 77 seems natural target here. Grind a little higher. Same with the Kiwi. And dollar CAD. Yeah, I mean, some really big support, trendline support coming up. If we can break down, you can imagine a move to 130 quite quickly. And if oil wants to continue its rally, which would be good for me at the moment, then you might see that as well. And Euro Yen it's an interesting run, right? Didn't really give us that pullback to that level that we wanted. Well, once again, didn't get to back towards 122 or 123. We found support a lot higher than that. Now, I mean, it's one of those most logical trades out there this year for me to be long. And if I had to pick one trade, it would be long Euro Yen for the next 12 months. I suspect of going at least to 130. But yeah, I mean, I still wanted to buy some pullback, and we just never got it. So that's not a bad thing. That means we just got to raise our entry points and where we now look to get in. Like the Fed can get a lot more dovish, I suppose, but I mean the risk to this trade is stock markets, right? The risk to this Euro Yen is a stock correction, but that stock correction, whatever happens, is what we want to use to get long. Because with Eurozone yields increasing eventually, Japanese not going anywhere too quickly, it's a really one-way sort of bet going forward. And short-term safe haven buying is not really it's not a longer term method, right? It can't hold it down forever. There is some election risk coming, but it looks like Merkel's getting ahead further and further. So German elections aren't going to be a big deal. Very solid grind higher. This is the 4 hour. So it's well positioned as well. And Euro pound's not really doing too much, but the longer it doesn't go up, the more likely we are going to see that sell-off that comes with the pound move towards 130. But let's not preempt that, right? Let's not try to jump on that before it happens. All right, guys. Good luck with your trades. I'll be back tomorrow at the same time. Hopefully, we can make a bit of money this week. It was a good last week. Yeah, it was a good week last week. It's getting a little bit of form back, so hopefully we can continue that. I'm streaming on Tuesday and Wednesday. I'm actually going on Thursday down to Adelaide for a friend's wedding, so I won't be streaming on Thursday or Friday. So we'll try and get everything sorted for the I mean, look, the main speeches are happening on Wednesday night. Alright, so maybe we can see if we can sneak in some Thursday night live action, do a bit more streaming on Wednesday to make up for the lack of Thursday. Might do 2 streams on Wednesday to sort of make up for that. One of the speeches, depending on who's likely who's leaked out something, because if someone's going to say something big, they might leak it to the market anyway. Just ECB staffers or BOJ source, something to give the market a little bit of warning. And that these big events and other big events like Jackson Hole, you usually get that sort of feeding to the press. But let's see how we go this week. It should be an interesting week. It's a quiet week apart from those numbers, right? Apart from those speakers. Next week's the first real big week, and that's we get all the PMI data and then the US NFP. Alright, traders, trade safe. I'll be back tomorrow.